Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. We got to get started. Got carried away talking with Paulie there. So let's go ahead and grab the bias chart and let's see here. Let's go ahead and get started. Let's go with the euro. Okay, so starting off with the euro dollar, the euro has not been able to, you know, it's just not been able to muster much. Even though the dollar index stopped at like really what I feel is key resistance, that has not allowed for a lot of a rally in the euro. But we did come off of the lows, and I still feel that we're trapped here. If you look at, first of all, if you look at the support, and this is like the uh, what we had written down yesterday, right through here, and we might have put down 109.70. I think this 109.70 is still going to be pretty key. Resistance, we wrote down 110.60, and that really held as resistance, and I think that that's going to be pretty critical on the way back up. It's just the underside of this trend line, so and I did not short the euro up there, by the way. I think I played the euro. How did I play the euro yesterday? I'm trying to think how in the hell I played it. I played it on the long side, but I got out of the euro and the pound like yesterday evening. I want to say I got out of the euro. I got out of the euro. I bought it at like 109.85 or 109.86 or something, and I sold it at like 110.25 or 30 or something. I actually did pretty well considering how tight the range has been, but it wasn't like, it's not like I made, the entire range or anything ridiculous. It was just it was a nice gain. I'm really happy I got out of the pound last night too, because I actually sold a couple of yen pairs last night, which I'm out of the money by just a few pips on the Aussie, Canadian, and New Zealand yen, and I'm down like 15 pips in the dollar yen. I'm just sitting in some yen pairs on the short side, but nothing really to write home about. I did get out of the cable in the euro yesterday evening, which was really nice. Like, I want to say it was about 12 hours ago. So that was good. And I'm not really too excited about playing the euro, frankly. I mean, you could probably buy it on a dip down to 109.70, and I think 106 or 110.70 is probably going to be good resistance. So 1.0970, I think that is going to be pretty key support. That's a 786 retracement right here, right there, 786 retracement of this range, also horizontal support. Excuse me, horizontal support. Now, resistance is probably just going to be a move up to 110. Well, actually, it's 110.65 now instead of 110.60. It's a slow-moving trend line, so it's moving up about 5 pips a day. So that means, yesterday was at 110.60. Today it'll be at 110.65. It's nothing great. If you can get above that, that probably would take us up towards 111. I just don't, frankly, I just don't see it today. I really don't. But anyway, that's what we're dealing with predominantly right now. All right, 110.65, and it's still bearish. I would ultimately love to sell the euro dollar, above 111, closer to 112 if I could get it. All right. I still look at that dollar index, which we'll go and look at a little bit later here in a minute. Let's take a look at the cable. So, as I tweeted out a little earlier, the problem that the pound has now, I've been playing this inverted head and shoulder pattern. I've been playing it to the long side, and this week I've bought it twice, and I've done well with the pound. It's not like I've been looking to make all the way up to 135. I think I bought it earlier this week, like right here, like at 131. I sold it at like 132 and change, almost 133. I did really well there. I bought it yesterday like 131.50. I think I sold it at like I sold it at like 132.40 or something. I didn't, make it all the way up there, and we've come right back down to what's really critical support. See, the thing is if you break this 130.50, I'm going to write it down. 130, whoops, 130.50. If we break that, the pound is done, in my opinion. Then we're heading towards 125. My opinion is if we break through here, and look, um, I want to buy the cable at 125. I think everybody knows that here. I was a little worried the last couple of weeks that because I was obviously in Hawaii during the Brexit. Following the Brexit, the pound had recovered, and I'm like, man, and you all should know this, especially those of you that have been listening in at least for the last month. I've been targeting down here at 124, 125, and what I was concerned with coming back from Kauai is that we were here, and I'm like, damn it, maybe we're never going to get it down to 125, and maybe I missed my opportunity to buy the cable. Well, frankly, if we break through that 130.50, I think it does open the door for a possible move to 125, possible. Now, that doesn't mean we're going to go down there, but I think that the risks are higher that happens now. Okay. That we head down towards 125, and really, guys, I hope we do. I mean, I think the pound is going to be one of the best purchases towards the end of this year, and riding it in for the next 12 months, maybe even into 2017, full year into 2017. I want to be long the cable. I've been thinking I missed my opportunity, and I'm going to just have to chase it all the way up here through 140, 141, and all this crap. But I don't know. I think the risks are now starting to be that the cable makes a run down there, and then you think about that, the euro pound could quite possibly run up towards 87 pence, which we ultimately have been thinking that's where we're going to go anyway. It all seems very likely now. It's becoming more and more possible at this point. All right. Now, the pound, in order to shake off this bearishness here, let me, I don't want to delete that just yet. Actually, I probably do. Let's get rid of these. Okay. We're going to get rid of them for now. Okay. To take off this bearish move with the cable, let me remove this for a second. We don't need that. We don't need this. Yeah, I mean, at this stage, really, we have to take out 133. I'm going to remove this. Let's get rid of that. I mean, to shake off this bearishness now, we have to take out 133. And there's no if, and, or buts about it. It's bearish. All right, let's go over to the Swissy. So the Swissy, if you don't follow Forex Analytics, which you guys should be at least trying it, right? For it's $1 for 20 days, so make sure you guys get signed up over the weekend if you can. That's a tweezer top. False breakdown, or false breakout. Tweezer top at the highs. I'm not sure with the Swissy because I just have an issue with it, but I did put out a pattern in play yesterday. So I'm not actually trading this pattern in play, but it is a pattern in play. And it does target, back down here, when you have this tweezer top. Hold on, let's go over to the daily chart. Yeah, the tweezer top, it does target right back here towards that 618. So I think you got to be really careful of with this Swissy. I think the risk is now that if we break through 98.40, we're going right back down here to the 618. Okay, so there is a tweezer top resistance, and that is resistance now is 99 cents, and that is key. All right, today support is 98.40, and if that breaks, that would be bearish. Okay. It's in a range. Let's go to the yen. I am short yen. Okay. Long yen, excuse me, short dollar yen. All right. I'm short dollar yen. My cost average right now is at 105.95. All right. I'm out of the money. About 19 pips. Not even worried about it. Not even worried about it at this point. Okay. Now, can we still bounce? Sure. $50 retracement comes in at 106.45. 106.45. And that is also horizontal resistance. Support is 105.40. If that breaks, this would be very bearish. And we are in the range. We're just at the upper end of our range. Keep in mind the longer term charts here. Really quick. Oh, okay. Keep in mind the longer term charts here. We're at channel. Let's get rid of that for a second. We're at channel resistance. This, if you guys missed it, it's a bearish engulfing candle in the dollar yen. That's why I'm really not worried about it. I'm short the dollar yen. It may not have follow through today, but it should have follow through in the next day or two. All right. So the dollar yen, I don't mind being short here. It is really just a very, very bearish engulfing candle. Okay. Where am I at? Dollar Canadian. Let's go over the Canadian. Obviously, we got Canadian day to day. We got retail sales and CPI. And I'll tell you what, this Canadian, I agree with Paul. And you guys know this 131.40, it's major resistance. 131.40. Major resistance. If we clear that today, the dollar Canadian is off to the races. Okay? It would be off to the races. We're in a range, but we're threatening an upside breakout. If that Canadian data is weak, I said Canadian. If that Canadian data is weak, we are going to fly through the resistance. Now, I'm a little skeptical about the Canadian inflation data. I actually think Canadian inflation data is going to be stronger, but we'll see. All right. Support will be at 130. I think that's what we wrote down yesterday, and I think it's a round number. And matter of fact, let's get rid of this. It might even be before then. Hold on. Let's delete that. Yeah, I really think that support's going to be ahead of 130. It's going to be right through here. You got that spike high. You got all these little wicks right around here. You got the spike low 130 and a quarter. So really 130 and a quarter is support. Okay. All right. Let's go to the Kiwi. Now here's the New Zealand dollar. Now the New Zealand dollar, we had a hammer yesterday. We had a hammer. We completed a flag pattern. Okay, and look at all those long wicks. Now, what's interesting about this Kiwi? Let's remove these for a second. We also had a false breakdown below these lows, below the support, which means that now this support is very critical, 69.50. So that should not be broken. If it is, then the Kiwi's in, whoops, 69.50. 69.50. If Kiwi breaks through that, it's over. Just going to tell you right now, if the Kiwi breaks these lows, which is 69.50, if it breaks that low, done. Kiwi's finished. Kiwi's coming, down to the mid 60-cent level. We're gonna be, we're coming down here. Okay, that should not be broken, at least not today. But if it does, that is going to be a problem. Now, resistance. Remember, we have a hammer yesterday. That's a hammer. Resistance is right where we're at, basically. It's pretty fitting for the Kiwi, though, as far as I'm concerned. The central bank, now makes us believe that there's, a rate cut is likely, and now the Kiwi's probably going to do a little bit of a recovery back up towards, here for next week. That's what I really want to short the Kiwi back on a little bit of a retracement. Okay. But if we break through 70.15, we're going to break higher. 7015. Okay. We are in a range. I had it bearish yesterday, didn't I? But the problem is we just didn't have any downside follow through. We create a hammer, and there's a risk now of a bit of recovery here. Okay, when I come back, we're going to do the Aussie and all the rest, so don't go anywhere. I'm going to go grab some more coffee. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and we're about a half an hour out from this Canadian data. Let's go ahead and finish up the analysis here. So let's take a look. And by the way, some ECB news that just was released, they say that some ECB sources, of course it's always sources, right? No urgency for easing action in September, no shortage of assets to purchase. I mean, when the ECB is buying, Babe Ruth trading cards for asset purchases. I mean, of course. I mean, you go from like Babe Ruth baseball cards to Mickey Mantle. I mean, there's not a lot of shortage there. You can pick up a lot of inventory, for safe assets like baseball trading cards, especially if you flip over to like comic books. Yeah, I mean, that's that's the ECB for you. Joking. Bad joke on a Friday morning. See, it's Friday. Just give me a break. I'm not even funny. I'm not even funny anymore. All right, and I never was actually. So okay, so here's the Aussie, and here's the Aussie dollar. So the Aussie's on support, which is really key. I mean, look, I'm not buying the Aussie dollar. I'm actually short some Aussie yen, but if I was going to buy the Aussie dollar, I would buy it right now. Because you know what your risk is, right? You know what your risk is. Unfortunately, we're right in the middle of the range, but yeah, ECB is going to start buying developed Pokemon accounts. That's I'm gonna have to. I was going to tweet something, but I won't. I can't. It's too stupid. Anyway, if you look at the Aussie, we're smack dab in the middle of a freaking triangle. So it's like, to trade the Aussie dollar right now, it's like, okay, do I really want to be caught right in the middle of this apex of this triangle? You know what I mean? But if you're gonna buy the Aussie, as long as it stays above 74.50, I'm just trying to find something for you guys to do today. 74.45, I think, is what we wrote down yesterday. That's key. Now 75 and a quarter. This is the same numbers that we wrote down yesterday. If we break above there, then we'll head to the upper end of our. I'm tired. By the way, I watched that movie about Benghazi, the 13 Hours. I watched that movie last night. I recorded the RNC. I watched like part of it. I made it through like Peter Thiel and the guy that put together Donald Trump Foundation or whatever. And then I recorded Ivanka and Donald. I basically said, screw you guys, I don't want to listen to this crap. And I went and watched that movie instead. Unfortunately, the movie is like 2.5 hours long, so I went to bed a little late last night for me. But man, what a great movie. Holy cow. If you guys have not seen that movie, it's action packed. Obviously, it's just a really, really great movie. It's a sad story. Obviously, it's one of the things that, for me, as much as I have a hard time supporting Donald Trump, well, actually, I will not support Donald Trump. That's just bottom line. I have a really difficult time supporting Hillary Clinton. Um, because of mishaps like the one in Benghazi, and that's just many things to name just one. There's many things reason why I won't support her either. But yeah, watching that movie was really sad. It was sad just because if you guys don't know this about me, I was a Marine infantryman and I was in Somalia in 1992, and we were the first Marines on the ground, and so I watch movies like that, and I'm very sensitive to military operations, and so anyway, um, okay, so nothing about that, but it was a really good movie. If you guys have not seen it, I had not seen it. It was one of those I wanted to see in the movie theater, and my wife just she'd rather go see some girl flick. So I have to pick my battles. Those are the ones where I have to watch that movie at home, which is fine by me, but. Anyway, so here's the dollar. We are once again up at really key resistance. Now, if you don't understand that resistance and why it's such a big deal, it is the 618 retracement. 618 retracement, previous support, current resistance, and we're just knocking our head up against it again today. And 9730. 9680. It's same numbers we wrote down yesterday. 9680 and 9730. Is that what it is? 9730. Yeah, and we're in a range. Okay. Peso. Out of Mexico. Today we do have inflation data coming out of Mexico today. Just FYI, that'll come in right at the same time Canadian data. Oh no, it's a half an hour later. I'm sorry, it's right at the end of the morning edge. But we're just kind of grinding our way higher here in the peso. I really don't know what to do with the peso at the moment. There hasn't been any risk aversion, but it's been grinding higher slowly. I don't know if that's telling us that there's going to be some, risk aversion eventually, but we're grinding. This is the least amount of volatility I think we've seen in the peso in quite some time. It's tempting not to just buy it here, really. Very tempting not to just get long here. Put stops below 1853. I'm going to buy a little bit. I'm going to buy a little bit of peso here, and I'm going to put in a stop. Just bought some at 862, 1862. The thing moves so fast. All right. So you don't want to risk below here. I figure I'd be long a little bit of peso because if the market does see some risk aversion, might see a little bit of a move. This is not by the way, just so you all know, this is not a dollar long play. This is more of a risk aversion play. Okay. So 1853 is support. See resistance. 1880, 1878 is a 786. So I'll write down 1880. It's in the range. It's right, it's sitting right on that trend line, so I don't mind being long here. I really don't. Let's go over to the Norwegian krona. Same numbers as yesterday, right? 1843.50, 1855, 1843.50, 1855. Is that? Yeah. Okay. Swedish krona. Ooh. Oh, I was trying to break higher here. It's interesting. Uh, 1864 supports down here. Yeah, notice that this here. Let me get rid of these. This trend line will come in right here anyway. 1851, 1864, 1851, 1864, and these are both range. Okay. So there we are. There's your bias chart. It's done. Let's go ahead and take your questions. All right. So first question or comment comes in